Now, a trader may evaluate their trading system by simply asking themselves, does this system work? However, that may actually be the wrong question, and a better one may align more with, where does this system stop working? Because every trading system has its limits, and the problem is discovering these limits after the performance has started to deteriorate. So we're going to look at this a little bit further right now. So this circle represents a range of conditions where the trading system performs as expected. The area inside can be referred to as the operating zone. Now, this does not mean that every trade inside is profitable. Losing trades and drawdowns still happen, but they're consistent with the design of the system, and as a result, the output is positive expectancy. But outside this boundary, as the volatility changes, price behaviour changes as well. As the correlation increases, more positions start to move together. As exposure starts to become more concentrated, individual positions start to have greater influence on the portfolio performance. And as the market behavior evolves, the original conditions start to become less reliable. Now, none of these variables lead to immediate failure, but they do reduce the margin of safety, because outside the boundary, expectancy starts to become less predictable, and drawdowns start to increase, which means that they become slower to recover from. And finally, performance starts to deteriorate. So we're going to diagnose this now in a little bit more detail. So it's important to note that we don't observe this operating zone directly, but it's revealed more through the system's behaviour. This means that if expectancy is stable, drawdowns are consistent, and the market behaviour is normal, we can assume that the underlying conditions are continuing to support the system. But you might ask, how do I stay within the boundaries? Well, this relates more to monitoring the structure surrounding an individual strategy, because changes in the correlations or portfolio structure, even the market behavior or drawdown characteristics, can push a system towards its operating limits. And then drawdowns are misunderstood as the problem, but they tend to be the first observable symptom of a deterioration in the trading performance. Because every trading system has its breaking point, and the objective is understanding the assumptions behind a system, because if you understand the operating limits, you stop asking, does this strategy work? And more, is this system behaving as expected? And trading performance relates more to what happened with the trading system in comparison to diagnostics, which is more about why did this happen? And that's the difference between evaluating a trading system and truly understanding it. Therefore, if you'd like to explore structural analysis or trading system diagnostics in a bit more detail, then I provide additional information in the description below. Thanks for watching today, and I'll see you in the next video.